Good morning, trading world. It is July 6, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. All right. The market is having trouble letting go of the fear to even try to rally, proven by the heights of the US dollar right now. With the dollar rising, it seems like even more of a good time to expound on why I use the dollar to track fear in the market. And this stems, I got a question yesterday from a Reddit follower to expound more on that particular topic. So that's what I'm going to do. I'm running behind this morning, but we're going to try to get through this as quickly as possible. The easiest way for me to answer the question as far as why the U.S. is basically the place, or why I use it to kind of measure fear within the global economy, is easily put as the US dollar is the cleanest dirty shirt in the dirty clothes basket. Have you ever wanted to go out and all the clothes were dirty in a dirty clothes basket, and you kind of fumble through the dirty clothes basket and sniffing shirts to see what's the cleanest? Well, that's basically what the world is doing in the global economy, sniffing through all the different currencies, trying to find where is the best to go. And right now it happens to be the US dollar. When it comes to the world economy, since the COVID crash, it wasn't just our Fed that was toying with bond rates and currency. This was happening with central banks all over the world. So much so that a lot of places went into a negative interest rate policy. As quoted from Investopedia, with negative interest rates, cash deposited at bank yields a storage charge rather than the opportunity to earn interest income. By charging European banks to store their reserves at the central bank, the policyholders hope to encourage banks to lend more. Another side effect of that negative interest rate is that it devalues currency, as proven by Japan, who has practiced this for many years now. The U.S. was one of the few countries that kept positive rates. However small they were still positive until you add for inflation, but nonetheless supposedly still positive. Combine this with the fact that even though it is falling off, but for now the US dollar is still the world reserve currency, and the US government is viewed as the most stable leadership. Anytime there is trouble finding alpha between investments or just parking money, the US dollar has been the place to go. Even more so now with the falling of the equity market. With the world in turmoil and countries across the world with currency rotting away due to inflation and negative real rates, the easiest solution is to use your currency to buy U.S. treasuries, or most commonly known as T-bills. Each week, the U.S. Treasury auctions off currency at a discount rate in a Dutch-style auction at different maturities. For example, This is the equivalent of saying you are willing to pay $75 for $100 that won't be available for some time in the future, whatever its maturity date is. This is just one of many ways others buy US dollars to protect against losing money to negative real rates, currency devaluation, and inflation. All right, that was a quick explanation on kind of why I use the dollar as a fear measure or a VIX. For a while, I stopped looking at VIX because in such a bull market we were in, no one was really buying puts for protection, and that's all the VIX is. It's basically a measure of puts being bought in the SPX, basically. And with puts being at an all-time low, like the quickest way for me to see that, and let me throw this in there, I really used to use the bond market as kind of insight every day as to what would happen in the equity market. Remember, I just did a pre-market where I kind of explained that the equity market is an afterthought. For the last few years, we've had the tail wagging the dog, which means the equity market was kind of controlling everything when it used to be the bond market that controlled everything. And since the Fed started toying with the bond yields and playing with currency, printing out all this money, the bond market kind of went to shit, so to say. So it was, you couldn't use, or I couldn't use the bond market to find any hedgeway or foreshadow anything. But now that the Fed has kind of let go of the reins of the bond market, things are kind of settling back to normal. So I still use that US dollar because the Fed is still, in a sense, letting go the reins by cutting back the quantitative easing or the purchasing of bonds. So as they continue to do that, the more things get back to normal, the more I can look at the normal things such as bonds to kind of foreshadow what happens in the market. Because overall, the bond market is the biggest notional value of investment that we have. And with that being said, I wanted to put up quickly my 4-hour chart. I spoke a lot yesterday about kind of keeping a higher low going. I was looking for it to be at that 375, but we did, however, keep the higher low in place, but it wasn't at 375. We actually came down to around the 373, 372 area to keep that higher low in place. So that's what you're looking at here. There's basically a trend line. Let me get this off. Just a moment. Alright, I just wanted to briefly show you where we are on the 4-hour chart. We're in another sideways squeeze to figure out what the direction is, whether we're going to step up level or continue lower. So I'm looking for this lower trend line to hold here. Right now it's at the 373 area, so I'm looking for this to hold as we continue to try to squeeze up and break out to the upside. So that's where we are right now. I do expect to kind of pull back in here somewhere, but looking for this 373 to hold. Let me bring up the key levels of the day. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 381 to the 382 area. Then we have our queen resistance 383 to the 384 area. Then king resistance 385 to the 390 area. Again, I still expect a lot of resistance around this 380, 384, 385 area. There's going to be a lot of resistance there. I expect another rejection. On the support side, we have our jack support at 380 to the 379 area. Then we have our queen support 378 to the 375 area. Then king support 374 to the 371 area. And we continue to hold this 371 to 374 that continues to keep this higher low building. The main thesis for today is bullish, closing above the 381.96 with a projected target high of between 383 and 388. The alternate thesis is bearish, closing below the 381.96 with a projected target high of between projected target low between 380 and 373. The current channel we're in is 379 all the way up to 397. So we have that potential over the next few days to go all the way up to 397. With that, let me bring up the scenarios of the day. All right, our first scenario is our expansive range structure. We can look to set a decision area low boundary around the jack or queen support area before chopping back and forth and pushing the high boundary higher, or just pushing that high boundary. Again, I expect to test it at 384, 385 area where it will possibly reject maybe once before we break through. Our next scenario is our trend day up. We can open gap up, start with a fade back toward the previous close. We find support on or before that previous close, then begin the uptrend for the morning. We find midday chop either around our queen or king resistance area and possibly fade into the close at some point today. All right, let's bring up the last scenario. All right, the last scenario, which is pretty evenly based probability with the last scenario, the last two, is our rounded reversal day type structure. We could get a continued push higher toward the jack or queen, should be resistance area, and find midday chop around either that queen or king resistance area before spending the same energy we used going up to come back down the second half of the day. With this scenario, we want to be aware of the vice versa, which could look like this, where we continue lower Find our midday chop around the, could be the Jack or Queen support area. And then that same energy we use coming down to it, we could see that opposite and use that same amount of force going back up the second half of the day. Those are the scenarios for the day. I apologize. I'm rushing today. I got to get out of here today. I got some other business to attend to. So trading will be relatively light for me today, if at all. But wanted to at least get or address the question and get the pre-market out today before I got out. And that is pretty much it. As always, please know and understand your risk, because your primary job as a trader is to protect the capital that you have. As always, wishing you a positive trading day. Hope this helps. Have a great one.